Some of these very successful plant-based companies have kind of proven that you could be an impact company trying to make some positive changes to the community or the environment and yet be very profitable to keep driving that impact.
A lot of the corporations that we work with, they have in mind that they have to put more investment toward the environment and making an impact on the environment.
What are your guys' feelings about kind of impact and sustainable actions? I think not every company is an impact company, but I've noticed that more and more of the successful companies are paying attention to it and talking about it, not just kind of in their corporate documents, but actually including it in their pitch decks. What are your feelings about kind of impact with across all of tech?
Now, look, I mean, it's been a great, time. I mean, we've been seeing the focus on impact, go up in the last 5 to 7 years. And obviously, the pandemic has put a lot of emphasis on whether it's startups or early stage companies or even some of the very well-established companies out there, talking about impact, trying to do their bit. What I'm surprisingly seeing a lot in my interactions with the community, I see a lot of family offices now focusing on driving impact, whether it's, on the education front, on the equal employment opportunity front, on the climate change front, and many of those, United Nations 17 SDGs that few people are trying to tackle and bits and pieces of that. So I see a lot of interest in the investment community because I think, a lot of people like the Beyonds of the world, the Impossible Burgers of the world, the Oatleys of the world, and some of these very successful plant-based companies have kind of proven that you could be an impact company trying to make some positive changes to the community or the environment and yet be very profitable to keep driving that impact. And I think that understanding and proof is basically motivating a lot of investors, both institutional and high net worth, to get into impact investing and taking it very, very seriously. Passion is fantastic. You're driven by a purpose. You want to make a difference to both the planet as well as the community, and we love that. But to be able to sustain that difference, the company's got to be successful. Profits, it's got to be profitable to kind of keep doing that. And I think that's where we struggle between a lot of passion and a lot of commercial nuances that needs to kind of keep that passion sustaining.
We work with a lot of corporations in Japan and in South Korea, and some of them being our LPs, we do have a lot of deep conversation about impact investing and, is it beyond capital gain, or what does impact investing look like? And you're confronted nowadays with a very serious problem. It's climate change and global warming. And so a lot of the corporations that we work with, they have in mind that they have to put more investment toward the environment and making an impact on the environment. And we also talk about, also on the social scale, investing into diversity and all that. But I think the point that I wanted to raise today is mostly about the changes that's an inner change that is happening with these corporations in Japan and in Korea, where there is a focus on carbon capture, carbon recycling. How do I improve my carbon footprint, and can I come to a point where I could be carbon negative? And so we do have this discussion very often, and we think that there's a growing interest currently from corporations from Southeast Asia into on the environment impact alongside with financial return. So we find it very satisfying that this is a concern that is growing, and that there are measures that are going to be taking place very soon.
There can never be a strategically impactful investment in a startup that ultimately fails, right? So one of the key things that we look for is to make sure that the company has the right management team going after the right opportunity with the right product and service, And once that is established, then if they have an additional ESG impact positive opportunity, that's great. But you can't put the cart before the horse. And so that's just something that we are obviously careful about.
I want to follow up on that. So what Amit mentioned at the very beginning is very important, because I can't tell you how many family offices reached out to me in the last couple of months to help them launch their own impact fund. In terms of how we measure them, we all have our own measurements. And for us specifically in healthcare, it just comes naturally. There are three metrics that I've seen that really comes alongside all the venture funds that focuses on impact. So the first one is quality. Are you completely eradicating cancer, for example, or are you just trying to help with the treatment? The second metric that I see is the quantity. So are you solving COVID-19, for example, or is it just a rare disease? And the third metric is really around the time of impact, which can be divided in itself in two phases. So the first one is when we will start seeing results. And the second phase is when can we start implementing the solutions? So these are the three metrics that I've usually been seeing around all impact investments, but it is very important to also note that each fund has their own metrics to measure any startup with.